How to use H4 profile to find explosive day trades. In this video, I will show you how I use the H4 candle to position myself within explosive intraday moves. And if you have been struggling to piece together ICT concepts, this video will bring you more clarity. Now, before we go into the source of today, you need to have these prerequisites in order for you to successfully apply this in your trading. You need to understand the anatomy of a candle, which is the power of theory. You need to know what the daily profile is and how to find it. You need to know what the weekly profile is. You need to understand what a candle projection is, which is the next day model. And you also need to know how to identify a liquidity. Now, because I don't want to make this video long, I will just brush through each of these prerequisites. And if you want me to go in depth on anyone, just let me know in the comments below. And if you already have an understanding of each and every one of these, then you can just skip this part. So let's jump right in. The anatomy of a candle. Now, the anatomy of a candle is simply what we call the power of theory, which is the open, high, low, and close of a candle, or the open, low, high, and close of a candle. So what this explains is just how a candle, every single candle that you see, how they form, be it on a daily time frame, be it on a weekly time frame, whichever time frame, every candle will always have this framework. So that is what the anatomy of a candle is. Daily profile. The daily profile is simply patterns of how a candle form within the day. So when I say pattern, I mean that there are certain mechanisms that should happen, that when they do happen, we can easily have a clear understanding, a clear idea of where the daily candle is likely to expand to. So this mechanism that help us to read, that help us to have a bias or frame a bias on what the daily candle is likely to do for that day. This is what we call the profiles, right? This is what we call the profile. So there are different kind of profiles that form within the daily candle. We have the London reversals, we have the New York manipulation, we have the New York reversal. We have seek and destroy profile, and then there's others that I don't really mention because they are not really necessary, or I don't really trade them, right? So the first one, which I'll be explaining today, is the London reversal. So the London reversal is simply when the intraday high or low is formed during the London session and New York expand into the opposing direction. So we look for this profile after having the expectation that the daily profile is likely to expand in one direction. Now the next, we have the New York reversal. So the New York reversal is when the intraday high or low of the day forms during New York, right? So we want to see the intraday high form around New York open before we then see the reversals, which continues in the opposite direction throughout that session. So we could have something like this, manipulate this higher time frame PDRA during New York session before it begins to expand. Now the New York manipulation profile. For this profile, we look for the New York open to manipulate the London consolidation range and then expand in the opposite direction. So this profile, many times it means that the Asian is ranging and the London also ranges, which means we form a consolidation, and then we are expecting that the New York open is going to manipulate that range that form before expanding to our overall direction. Now the presence of SMT on an overlapping daily profile on two correlated pairs is the only condition for taking entries away from an unmanipulated consolidation range. So what this means is that if the Asian session ranges, right? So let's say the Asian session ranges and then London session also ranges, but the New York open and doesn't manipulate the London and doesn't manipulate this low. The only reason why we'll be considering that as a New York manipulation is if there's an SMT that happens. So we can easily project that to be the manipulation. Meaning if we are trading US 100 or NQ, we'll be expecting ES to manipulate and NQ not manipulating. So that's the only basis we can use to form a trade when there is no manipulation during New York session. Weekly profile. Now there are three weekly profiles. Although ICT explained 6 to 8 different type of weekly profile, but I only picked out three types because these are the ones I naturally gravitate to. I These ones tend to happen more times during the week. So the first one is the classic expansion. So the classic expansion is simply price opens during that week, then it forms the high, it forms the low or high. It forms the low of the week during Monday to Wednesday before expanding high to the overall the overall weekly direction, then it closes. That is the classic expansion. Now the next one is the midweek reversal. So the midweek reversals is simply when Monday and Tuesday open in a range most times, then on Wednesday opens and then manipulates this Monday and Tuesday low before expanding to the overall weekly direction. Now the next one is the consolidation reversal. The consolidation reversal usually most times happens on Thursday, right? So as it entails, the consolidate Monday, Tuesday, Wednesday range is stuck in a range, and then Thursday opens and manipulates the low and then expands higher to the overall direction of the week, right? So in a bearish scenario, it's going to be the Monday to Wednesday range, and Thursday open manipulates then expand lower to the overall direction of the week. Now the next is candle projection, which is the next day model. So the candle projection is simply, the logic there is that, let's say we are in a bullish market and we have a bullish candle. Let's say this is a bullish candle and expands high like this. We can expect that the next candle that should open should be a bullish candle, right? So like that, a bullish candle like that. So if we have a bearish candle, we can expect that the next candle to open that is going to open is going to be a bearish candle. So that's why we call it the next day model, right? But this is actually a model on its own, right? But that's not what we're going to be talking about today. Now here is an example of the next day model. So this is price open Monday, opens Tuesday, open Wednesday, and then Thursday it manipulates. This is an example of a consolidation reversal, which I explained earlier. So Thursday manipulate and then expand higher, which means that for the next day model, we won't take any trade within this until this particular thing form, once it manipulates higher. Once it manipulates higher on Thursday, we can expect that the next day is going to be a continuation of the expansion of the previous day to the overall direction. So that is what it simply entails. So I tend to call it candle projection instead of the next day model. So I prefer it that way because it means that I'm projecting where the next candle is likely going to form after, based on the fact that the previous candle that formed was a bullish candle. So an example of the next day model is going to be, if you look at this is a bullish candle. The next candle that open is bullish like that. If you observe it, next candle that open is bullish. The next one that open is likely to be bullish. So this is a daily time frame. So this candle opens bearish. This one the next candle that open is going to be bearish. So like that, for every bullish candle that open, we can expect that the next candle is going to also be a bullish candle, right? Till it's reached the overall direction of the week. But we must also take note of the fact that we are trading in the direction of our overall weekly DOL, that's drawn liquidity, right? That's what makes this particular thing works. So I don't want to go into details. Let me just move to the next thing. So now liquidity. So liquidity, this is something that a lot of people has overcomplicated. So in simple terms, every old highs and lows has liquidity resting there. So forget those ICT jargons that you've read. You don't need to overcomplicate it. Just know that every old high and low has liquidity resting there. Now let's jump into the main source of today, H4 profiling. This is what everyone has been waiting for. Now, H4 candles usually opens around 2 a.m. New York time, 6 a.m. New York time, and then 10 a.m. New York time. These are the times when a new H4 a new H4 candle is likely going to form in a given day. You can also check your broker, because I heard that most brokers' time can be different. Now, before we start trading off the H4 candle, we need to have a clear understanding of price from the higher time frame, which we call the top-down analysis. So first thing first, we need to know what price did the previous day. This is so important. What did price do the previous day? We need to know where price is coming from, right? We also need to know where price is likely going to head to, which is the next strong liquidity. We also need to know what price did during the Asian session, and we also need to know what price did during the London session. So these are things that help us to form a bias for that particular day, right? So we use this to form a bias for that particular day. Of course, having a bias doesn't mean we can't be flexible. We just need to have an idea of where the candle is likely to expand to, and then position our trading plan in that direction. So now that you've answered these questions, right, we can now move to the next step. H4 profiling. A H4 candle has four 1 hour candles inside. So these are the four 1 hour candles that is made up of this one H4 candle here. So what you want to do is you want to go to your 1 hour time frame to mark out these levels. So here's an example. This is a 4 hour candle, the 4 hour candle chart, right? This is a 4 hour chart time frame. Now, if you look at this, the price has been expanding high, and then all of a sudden it makes this bearish move to fill out this fair value gap here, right? And then from this position, we're expecting price to either break out of this fair value gap or expand high to clear out this liquidity that is here. This is the previous session high, right? So now we go to our 1 hour time frame and we mark out this candle. So let's say this candle. So look at this candle, all this bearish candle here. This bearish candle you can see here, all of them here. This is it here. This is it here. This one candle. That is what it's made up of. So we mark them out, right? 1 hour, we mark them out. Then we look for when we mark them out, what we're expecting we're expecting a power of three profile to form within this candle, right? So we mark that out, and then we go on a 15-minute time frame. I think this is a 15 minutes. Okay, this is a 1 minute time frame, right? So this is that bearish 4 hour candle we marked. So let's study it. So we look at it. It opened It did not manipulate, so we cannot expect anything. We wait for our significant time to happen. So on a US 100 or the futures market, New York session usually open around 9 o'clock and 9:30, right? So we look for, since we are still trading, we are trying to position ourselves within the H4, within one H4 candle. We mark out this 9 o'clock, right? That's what I usually do. So I mark out this 9 o'clock in, and I'm looking for, what I'm expecting is for that 9 o'clock to most likely manipulate this high or this high before expanding lower to this fair value gap here, right? So I'm expecting that to happen during 9:30 or before 9:30, right? So from what we can see, around 9:30 price did not manipulate high, and during before 9:30 price did not manipulate that high. It just keep expanding lower, right? So we don't want to chase price. So what we want to do is to wait for the next 4 hour candle to open. So the next 4 hour candle is going to open around 10 o'clock, right? So this is the next 4 hour candle. Since price has already come into this our H4 that we are projecting, right? This is the next projection. We are expecting that price should come into this buy side liquid, this sell side liquidity or CB, right? And then head to this buy side liquidity, which is going to be our overall direction for that day. So this profile that you're looking at here is what we call a New York reversal, right? This is a New York reversal profile. So let's go to what we're explaining. Now, this is 10 o'clock, right? 10 o'clock candle. This is 10 o'clock candle, which is where the 4 hour candle formed. So we can also mark out those areas, right? But I did not mark it out here. So what I was expecting is I was expecting the 10 o'clock candle to come into this fair value gap, break out this structure here, which is also the breakout block, right? Break out this structure, and then I'll look for my setup. I'll look for a bearish setup, I mean bullish setup, targeting this buy side liquidity, right? So I hope this is clear. Let's look at another example. Now for this example, this is a daily time frame. So this daily time frame, when you look at it, you can see that price is likely going to move to two different sides. It could either just start expanding and just expand into the 1 hour, into this 1 week fair value gap, or it takes out the previous day high and then just expand into this new week open gap, right? So during 6 o'clock, I mean during 1 hour, we see that price manipulates this high, right? So now we are most likely projecting price to manipulate here, to manipulate, I mean to expand lower into this new week open gap. Now, the fact that price has manipulated this high doesn't mean we can now start projecting to this projecting price to go to this new week open gap. That is because this price can easily just come here and just expand higher. So this is where this H4 profiling comes in. This is what it helps us do. So let's go to our lower time frame. Now, if you look at, this is our lower time frame, this is our 1 minute time frame, right? So this is where the 9 o'clock AM candle form. This is 1 hour candle, right? Yeah. So yeah, I was not able to mark that out here, but if I were to mark it, let's say this is the 1 hour candle. This is when the 4 hour candle opened, right? Let's say this is where it opens, right? So price started manipulating high, its range, then during 9 o'clock AM, 9 o'clock AM, it's ranged a bit, then manipulated this low, right? Formed a breaker block here, then before expanding higher, right? So the idea here is that we want to position ourselves within the H4 candle, which is what gives us the confidence that price is going to expand is that, number one, there is a weekly fair value gap here. See, there's a weekly fair value gap here. Number two, price has been ranging, right? And then during 9:30, during 9 o'clock, price manipulates this low. If it was to continue going down, it should have just keep going down. But what did it did? It displaced higher, right? Break this previous high and then made a breaker block, man, came into it and then start expanding higher. So this is where we want to position ourselves for this trade in the direction of the weekly DOL. That is why I explained earlier that the prerequisite for this particular H4 profiling is understanding how the weekly profile form, which is what I explained. So let's move to the next example. So as you can see, price continue going high till it gets to that level. Example 3. Now look at this. What do we see here? The previous day candle that opened was an indecision candle, right? Was an indecision candle. So we have the high here, and then this is the candle that we want to anticipate. Now look at this candle. This is a Thursday. Price open ranges, and then this is the buy side liquidity, right? Now this around this is our 10 o'clock. This is when the new candle is forming, right? As I explained earlier, new candle each day opens around 6, no, it opens around 2, it opens around 6, and it opens around 10, right? So if you cannot position ourselves within the 6 a.m. H4 candle, we can be calm and then position ourselves within the 10 a.m. candle, right? So for this particular setup, we notice that the 6 o'clock a.m. candle from 6 to 9, what price simply did was just took out liquidity from this area, right? So this means we can easily call this a London reversal, right? This is a London reversal, and then during from 6 to 9 9 o'clock, price just kept going in a range, right? So what do? We simply stay calm and then wait for the new candle to form. So 10 o'clock a.m. candle form. What did it do? It manipulates this low and break structure, formed a buy side liquidity. I mean, a BOS, right? It formed a BOS and then made a CISD, right? And this can become our level of entry. So we can place our setup here in the direction of this buy side liquidity. So you can see now that what we simply did was we positioned ourselves within the H4 candle that is forming from 10 o'clock till 11. So one thing I want you to know is that if you're trading the H4 profile, what you're just simply trying to do is you're trying to catch that H4 expansion, right? And in order for you to do that, you need to understand the daily bias or the daily profile for that day. And in order for you to understand the daily profile, just look at what the previous 4 hour did. Where is it coming from? Where is it heading to next, right? So once you understand where it's heading to, where it's coming from, you can use that to describe, is this a London reversal? Is this a New York reversal, right? And then you simply want to position yourself in the next candle that is going to form. That could be the next 1 hour candle within a H4 candle, or that could be the next 1 hour candle within a new H4 candle. So in this case, within we position ourselves within a new H4 candle around 10 o'clock a.m. Why? Because the previous H4 candle has already showed us that it is going to expand. How did it show us? It manipulated this level, right? So I hope this is clear enough. So if you found this video valuable, I want you to like and subscribe for more, right? You can also check the description to join our Telegram community where I post live data analysis and occasionally live stream, and you can also ask me questions if you need any help, right? So cheers, see you on the next video.